the difference that I see between this generation and the way previous generation invested is that, millennials, young investors, they accept risk in a more, acceptable manner. I talk to my father, I talk to our parents generation. They wouldn't move out of gold, retail, real estate, or FDs. Stock market, the first thing they would say is gamble. And I see current generation suddenly in the last 2 years, even stocks are conservative for them. They think crypto is the game. Stocks. Oh, I see people, millennials saying, I'm a conservative investor, thereby I invest in stocks. The most aggressive one is crypto. So how do you see this shift?
So, uh, I would like to say in that front, in most psychological models, humans are believed to act upon a pleasure principle. So the pleasure principle is basically the driving force that compels human being to gratify their need, wants, or urge. So there is no doubt that this generation have come a long way from fixed deposit and gold, but simply buying the dip is not the be all and end all investing. So millennial is a person who has born between 1980 to 2000, someone who is 20 to 40 years of age. So this is a segment that is now redefining India's financial success story. People in this age group makes up to 46% of the Indian workforce and contribute to 70% of the household income. So millennials have recently turned the rules upside down, as you were saying, especially when it comes to investing. They have there have been number of demat accounts that has been opening, but as you are rightly said that they are more towards the cryptocurrency and the new fancy things that have been coming in. So millennials are hunting for returns, which is driving risk hunger in investing in India. An impatient Indian investor class, largely driven by the millennials, is leaping into a riskier investment from peer-to-peer lending to cryptocurrencies in the hope that boosting returns rocked by one of the most inflation rates of Asia. So millennials spend beyond their means, and this often leaves them broke by the month end. And saving is the last thing that comes onto their mind. And perhaps in keeping with this, 60% of them are first time investors. Again, women rule the roost, investing twice as much as male counterparts. So more than 60% of the transactions of investments are coming from tier 2 and tier 3 cities. When it comes to investing preferences of the young guns, they prefer mutual funds, they prefer equity, and lastly in gold. So the major thing that they want to invest is that can give them the instant gratification so that they can earn soon. So I think that they should know what the risk factor is, what the risk appetite is, how much risk they can take, and then they should decide where to go and where not to, because they have 20, 30 years of good earning capacity that is ahead of them. So if there was a time to take some risk, then this is the time. But they should not go on a random basis that they should go for any investment. If they are a first time investor, they should not go for cryptos, because if your risk appetite is very less and you cannot afford to lose your money, let's say you have 10 lakh rupees and you cannot afford to lose it in a month, then you should not go in crypto. Then you should go for a safe investment. And if your risk appetite is such that you don't care if your 20 lakhs also go, then it is diversifying your portfolio. So as per your affordability to take risk, you should decide that in which kind of investments I should go.
Right, right. I'll ask you to jump in, Ravish. Here, so what Harpreet said is absolutely fine. But sometimes I think that, is it because millennials are conditioned differently, or is it because technology allows them to delve quickly into various asset classes? So I don't know if 20 years ago you could invest paperlessly in stocks by downloading an app, whether the previous generation would have acted the same way. So, do you think, Ravi, is that this generation is looking for instant gratification and impulse investments, or it's just that technology allows them, and thereby we as humans are naturally attracted towards quick investing and looking for quick returns?
Okay, firstly, thank you for having me here. I think it's definitely the latter. Human, tendencies mostly remain the same with whatever generation we are in. I think it's just what has changed over the last 10 or 15 years is that through internet there is now accessibility. And also there has been a revolution in payments. So now you can very easily link up your bank accounts to trading platforms like Zerodha, and instantly start trading. And I think that is what has fundamentally shifted this accessibility of ease of trading, and ease of also gathering information you yourself. And that is what has truly shifted the game for millennials versus the previous generations. Also, I think like new age markets like cryptos, which are now 24/7, like at least market ended at 5 p.m. before, but now these new age markets 24/7 is like an all day, all night gambling going on. So I think the main shift has been truly around the accessibility, which has driven all this interest from millennials.
So thank you, Ravi, so much for not blaming us millennials and shifting the blame to technology. I feel guilt-free. Thank you for not blaming finfluencers. I feel liberated. I would ask you, Adil, to jump in here. There's been a lot of regulatory uncertainty, and I'm sure you are no stranger to it, around the fate of cryptocurrencies in India. Recently, RBI made an informal announcement, or tried to nudge people in saying that it will favor a ban on cryptocurrencies. But last couple of years, rampant advertisement, all kind of crypto apps coming up, Bollywood actors, celebrities endorsing crypto apps. A lot of first time investors have actually started their journey by investing in cryptos. With this uncertainty now, with one app, almost pausing its operation, ED raids on another one, a lot of fear is there. Existing crypto investors, specifically first time investors, what would you say? What will be the right course of action now?
Yeah, good question, Pranjal. I think at Bank Bazaar, right, we've always tried to present the data basis which we then, suggest what could be the right course of action. Now, let's look at the data first behind your question. So with crypto, firstly, we have a asset class which is volatile, right? So we've seen over a 50% fall on multiple occasions. It's definitely an asset where, a certain kind of highly sophisticated investor with a small portion of capital may be looking at, but it's a very volatile asset and everyone has seen it play out. This is something we've been saying for years. The second point is the finance minister in her budget has clearly said that the taxation will be at the 30% range income tax level. Now consider this and compare it with an index equity mutual fund. If you hold it for over a year, you're getting taxed at long-term capital gains, which effectively is 10%. So where's 30%, where's 10%? And thirdly, you yourself highlighted the compliance issues, right? So the RBI has said that it's not very supportive. There's been no explicit ban. The court judgment exists. So it is still a area which is in flux. I would say millennials, please tread with caution. I think the blockchain is very valuable. I think we'll find long-term use of it. But it's not something that you should blindly rush into, because the point remains that I think Ravish made a great point about technology. Today, technology has made it frictionless. But the point is, right, the risk return profile of investments has not changed, right? You get into it knowing what your risk is, what your return is, and you need to be cognizant of that. The message I want to leave you with is tread with caution when it comes to cryptocurrencies.
Right, Adil. Very prudent. I mean, I'm sure a lot of investors. I wish, I pray that they follow this. They deal with cryptos with caution and do not treat it blindly as the next revolution that's going to go a 10x, 100x.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.